in the broader context of the post-pandemic period where we're trying to figure out what rates would generally be when we had a roof off the back of the inflation burst, we know for this moment, for the next period of time, we're somewhere in the fours on a risk-free basis. And as you know, if you're an analyzer looking at a portfolio company, you're a private equity sponsor that's sitting on 2,000 companies, as you know, they're out there, each worth $1 billion or more. They want to move them. So what's been one of the arguments not to move them? The argument has been the uncertainty around rates. So I'm not saying there isn't rate uncertainty at all. I'm saying we're kind of have that in a box. And the second box, I think, is kind of the end of history, which is we're going to have nation-state rivalries and interests. And you could argue, oh, but isn't that a chilling effect too? And I would argue, no, actually, if you have the combination of some certainty around general rate framework, and you know now that there is going to be discussions at the nation-state level, well, gosh, I have to act then. Am I going to be a buyer? Am I going to be a seller? Am I going to do some financial engineering? And that's why I'm bullish on the M&A cycle. I know some folks are still wondering, like, when's it coming? And there could be a pacing of that. But I feel like it's those two coming together, zero behind us and, you know, kind of the global race in front of us, that breeds M&A and capital markets activity.